Good afternoon, welcome to GrainTV. My name is Cody Bills. Today is June 30th. We had the Acreage Report. We also had quarterly grain stocks, and both of those reports drove the market higher here today. Let's turn over to the grain hedge trading platform and see where we closed off the day. Keep in mind, guys, that this is a platform that you can have at your home. We do have a mobile platform that would go great on any mobile phone. We also have a desktop platform that can go in your office. Both of these will offer live quotes. So if you are interested in that, please contact the office at 877-472-4607, or you can take a demo of the trading platform, see what it's like to have live quotes in the palm of your hand. Just visit grainhedge.com and click on the 14-day free trial up there. Put in your name and number, and we'll get in touch with you. Make sure you get the most out of that trial. Make sure that you're trained. Well, let's turn over, see where we closed off the day. Corn trading up 30 cents on the September contract to $4.22. Soybeans trading up 55 and a quarter on the November contract, up 10 to 10.35 and a quarter, and wheat in Chicago trading up 33 and a quarter cents to 6.16 and three quarters. Let's take a look at the charts here. As we move higher, one thing I want to note is all of these grains, corn, soybeans, and wheats, all seem to close off near the highs of the day. To me, this is a vote of confidence. This is strength. And I would suspect that we'll likely trade a little bit higher maybe in the overnight. I wouldn't be surprised if we get some continuation early on tomorrow. But do keep in mind, the movement that we saw today puts us up near some resistance levels that we haven't seen really since December for soybeans in particular. Take a look at the soybean chart. This is a daily chart. Each one of these bars represents 1 day worth of price activity, and we haven't been up in these price levels really since the very beginning of the year. It's good to be back here. Now it's 10.45 to 10.50 is the resistance level, even up to 10.60. You'll notice that was an area that acted as very strong resistance between October of last year and really the very beginning of the year in January. So that is a strong resistance level. I would suspect that if we do continue trading higher here in the earlier part of the day, that we will probably respect those price levels. I'm not necessarily saying we're going to hit that and go lower, but it could pause us, and I wouldn't even be surprised if we hit that level and trade off the highs if we do get continuation earlier on in the day. So that's just something to keep in mind. Of course, those are my opinions. Let's take a quick look at corn. You'll notice corn here also moving sharply higher. There's some resistance up there around 4.33 and three quarter on that September contract. Those are highs that we really set back in January, the very, very beginning of January. So those are resistance levels, again, that I think are within sight now and we should be paying close attention to as we move toward them. And of course, September wheat also moving higher on the day. Resistance of 660. This is a December 18th. You'll notice that big doji up there back on December 18th. We ended up closing off near 660. The following day, we kind of gapped lower, and we really never turned around. We never were able to regain our footing. I think with that gap up there, that will likely offer some resistance. I think that probability increases with that being a gap. So those are the areas I think producers should be paying attention to. Keep in mind that we've been trading sharply higher here for multiple days in a row, and oftentimes this sort of trajectory is very difficult to sustain. So if we do get up near those resistance levels, I think that there might be an opportunity for prices to pause a little bit, maybe pull back, and then we'll have to see how the weather pans out, because so far it looks as though we're going to continue to get wet weather in the eastern part of the grain belt, where crop conditions continue to get revised lower. Let's talk a little bit about the acreage report and also about the quarterly grain stocks, because these are the numbers that really move the market early on in the trade. You'll notice that acreage numbers here for corn were revised lower. We were down 395,000 acres here from compared to expectations. You'll notice the market was expecting somewhere around 89.292 million acres. We got 88.897 million, and so really what we saw there is lower acreage. We also saw as a pretty significant decline in acreage forecast here from the March 31st report, and that provided some bullish buying there for corn. For soybeans, we saw acreage actually at a record high. So U.S. planting record soybean acreage here of 85.139. Now you'd think, okay, record highs here, you'd expect that to be relatively bearish, but we didn't get acreage as high as analysts were expecting. Analysts were expecting somewhere around 85.171 million acres. We got 85.139, so we were 32,000 acres off of expectations. But when you put the asterisks in there, the USDA did announce that following their acreage report, that they were going to resurvey cotton, soybeans, and sorghum acres in Texas, Kansas, Arkansas, and Missouri after excessive rains here really contributed to some significant planting delays. On Monday, we saw that soybeans were 94% complete. We're really at the end of the planting season, so it's going to be interesting to see whether or not we'll get any more acres in the ground. The results of those surveys will be announced on August 12th in the crop production report in August. So that little announcement following the release of soybean acreage, a little bit less than what analysts were expecting. I think what that does, it causes suspicion really, and you combine that with lower quarterly grain stocks that we saw, and you have a pretty bullish scenario in terms of moving the market higher. When you look at the quarterly grain stocks, you'll notice corn came out at 4.446 billion bushels, down 105 million bushels from expectations. So demand continues to be strong there for corn. For soybeans, same sort of situation, 45,000 bushels underneath analysts' expectations here. Analysts were expecting to see 670 million bushels. We saw 625 million bushels. So both of those, corn and soybeans quarterly stocks, really show strong usage and shows strong old crop demand. That also helped throw some buyers into the ring. For wheat, it just wasn't the case. We saw quarterly grain stocks of 752 million bushels. That was 35,000 bushels higher than the 718 the analysts were expecting. Keep in mind, there's a couple things I want producers to keep in mind, is that quarterly grain stocks show on-farm and off-farm storage. And one thing you'll notice is that corn stocks in all positions on June 1st, 2015 totaled to 4.45 billion bushels. Now that's up 15% from June. Of that, 2.28 billion bushels are stored on farms. That's up 22% from a year earlier. The off-farm storage is really up only 9%, I believe. So either way, what you're seeing here is on-farm storage is up a higher percentage than off-farm. That means there's more grain out there in producers' bins that's going to need to come onto the market. So that is the same sort of situation for soybeans. There's a higher percentage year over year of on-farm storage compared to off-farm storage. And so what that means is that there's going to be likely to be more grain coming onto the market later on this marketing year, and that's something to pay attention to. It may not necessarily play a very big role immediately, but when you look toward August and September, when producers are sweeping out those bins, we may see that impact basis, we may see that impact prices going forward, so just keep that in mind. Other than that, guys, we did have a few other headlines that came out this morning. We did see that the China Ag Minister plans to cut corn acreage in 2016. Really what they're trying to do is plant more beans, plant more barley, other grains out there, really to help draw down those huge corn stocks that they have on their balance sheet. And also they're trying to balance out their growing, trying to make it a little bit more sustainable and address the situation of soil deterioration in their crops. Other than that I think that'll play a role in the future. That's not something that you're going to immediately see the impact of, but that's a story that you're going to want to pay attention to as we move forward. Also across the headlines, we saw the EU lower their wheat forecast, and they lowered their wheat forecast to 140 million metric tons, down 1.5 million metric tons. They lowered barley down to 58.1 million metric tons. That's down 1.4. And of course, corn, they did not revise that lower. It actually was added 0.3 million metric tons to the forecast, up to 68.4. What we're seeing there is a little bit of dry weather in Germany and the rest of the EU, and so that could impact grains here moving forward. Also, in the wheat side of things, southern Russia is experiencing rain. They're experiencing harvest delays, and of course, rain late in the season is causing quality concerns here. So other than that, guys, that wraps up today's show. If you have any questions about what we talked about, please do give the office a call. The number is 877-472-4607. And again, if you'd like to have a demo of the trading platform that we offer over here at Grain Hedge, and you'd like to have a personalized one-on-one walkthrough, give us a call. Number's 877-472-4607. Thanks a lot for tuning in. We'll see you here Wednesday.